All right. It's Friday and it's time for the Security Token Show. We're your hosts. I'm Herwig Konings, and of course, I'm joined by Kyle Sonlin. And wow, winter is coming, so it's a good time to be here in Miami. Kyle, how are you?
I'm good, man. It's been a really great year. It's kind of crazy to think that we're already now into Q4. How time flies. And Herwig, I think we've got a good docket of news to cover this week, and a familiar face that's joining the show yet again.
Hundreds of millions of dollars in new tokenizations coming to market we're going to talk about. We've got a great interview with Carre if you want to go skip on ahead. And Kyle, we're going to ask this time in the beginning of our show, just especially if you're tuning in for a second time or more, please help us out. Give us a like. Make sure you subscribe to the show. We definitely appreciate the support. But with that, we've got an incredible show starting off with the market movements with Nico Pantelis joining us. So let's dive right in. Joining us from Dubai over there is Nico Pantelis. If you're not familiar, he's a prolific GP in the RWA space. He is a partner at Blue Bay Ventures, full disclosure. They're also an investor in us, so you know they're good at what they do. Nico, glad to have you on the show. We've got some great news. Anything you want to share? Anything you want to start off with?
Kyle, Herwig, I'm just waiting for October to begin.
October, I love that.
Yeah,
Waiting.
I think a lot of that. We'll see if it just stays a regular October or could turn into a Rectober, as they say. So let's see what happens. You never know. Hopefully not for the RWA space, because we are trucking along. Starting off here with a new real estate fund that's coming on chain on a Singaporean platform, Shintai. They actually have their own checks token powering their tokenization platform. It's a very cool structure. I know they're also expanding to the US. And Kin Capital is launching a $100 million real estate fund. Now they're doing this in sort of $5 million tranche to start, and gaining to that $100 million, which I think is smart, because just going for that full 100, as we've seen in the past, can be quite tricky, let's say. But I think 5 million is very digestible, and I hope they see a lot of success. Of course, for those who want to learn more, you go check it out, Kin Capital. But Kyle, Nico, any thoughts on this new offering?
Real estate, again, banging the drums from the tokenization side. This is a perfect match, as we've discussed many times in the past. A good fit for to get them to find liquidity for illiquid assets.
Yeah, I think the one interesting thing that I found with this one is that it's actually they're acquiring real estate trust deed positions as opposed to just kind of straight up equity in the underlying real estate. So I'm not necessarily a real estate expert to totally be able to break down the return differences in terms of how these things pay out, but it is kind of an interesting structure in terms of what they're buying, as opposed to it's not just another real estate fund.
Yeah, I think that is a good point, Kyle. When we talk about real estate, people point to the $300+ trillion worth of real estate globally, right? And that's in a variety of different structures. It's not just, it's all just property and the deed, et cetera. There's bonds, there's, different debt levels to different structures, different equities and fund structures and direct investments, and even, opportunities to invest in management companies and other things like that, right? So it goes crazy in the world of real estate. It's nice to be able to just say, all right, here's a fund with another, kind of differentiator. So very, very cool stuff. Moving on. Go ahead.
Yeah, it would be amazing if these guys found a solution for the deed problem online. That's many jurisdictions. It's a problem. I also hear it here in Dubai. As soon as the deed comes around, we have a problem online. So
this is where they try to circumvent that with the special purpose vehicle structure, right? That's definitely been pretty common, but pretty cool company here in Miami, on-chain listings, actually tackling the deed problem. Worth checking out, folks. But more news from HSBC, who is now an official powerhouse in the tokenization space, I would say. They have gold products and lots of other tokenization use cases, but their Orion DLT platform has another feat with this. This is not just another bond that they've tokenized, which is, $128 million. You're definitely getting the efficiencies of having a digital bond, taking advantage of their platform. But of course, as we all know, typically when you tokenize or put something on, a chain, it becomes not so liquid, actually, because now you need to tap into new markets. So actually, HSBC got around this liquidity problem by tapping in to the Hong Kong Stock Exchange, listing it and leveraging sort of traditional model to allow for liquidity while still taking advantage of those efficiencies. And, HSBC worked with a lot of big other banks like the Agriculture Bank of China, China Construction Bank, Bank of China, ICBC, Bank of Communications, all were involved. So obviously mega banks all, saying, hey, this is going to be the future of at least issuing these bonds, using Orion. Thoughts, gang?
How is it like a swap mechanism? How should I see this?
They say it's integrated with CMU systems, which is, essentially tapping into the traditional CSD provider. I imagine that they're probably enabling settlement and trading through this model. But if you want to just, receive the coupon or manage the bond from the back office perspective, HSBC is still seeing a much better improvement than if they were to just do the whole thing off chain. Does that make sense, Nico?
Yeah, it could be. It's like a transitioning method between TradFi and DeFi. Would be great to see these kinds of solutions, of course, because that's the only thing missing at the moment, in my opinion, is the big liquidity volumes come rushing into these tokenized assets.
Yeah, and this is actually the second bond that they've done this structure with. So they previously did a $750 million US bond in the same structure. This one is a bit smaller at $128 million US. And but I think the article did note that this one actually is going to be issued using English law as opposed to, a different jurisdiction's law structures. So maybe this one, they're kind of trying out the interjurisdictional compliance mechanics and really starting to work through some of that regulatory stuff. But again, the beautiful thing about smart contracts and a lot of this automation is that kind of once you do it once, you can do it again pretty quickly.
Maybe it's a compliance trick. Maybe the guys can come explain on your guys' show what it's all about.
Great. We'd love to host them.
Let's see if we can get them. Although I think, Kyle, that might have been a 725 million Hong Kong dollar bond. This is 128 million US, so it's about $1 billion Hong Kong dollars. Not sure.
Yeah, I think it's 756 US dollars on the last one.
Wow. So a little smaller bond. Interesting to see that they are going smaller. Next up, we're going to go bigger, though, with a $500 million private credit fund by Credible. They're starting off with 100 million of that, aiming to say go in Q1 to sort of get to that $500 million mark. But interestingly, they're also using Plume, an ETH2 that's in the market with a lot of other projects. So a lot of AUM, if you will, or a lot of token value locked, as the crypto industry likes to say, coming to that chain with a big offering like that here. And private credit, we've been talking about it. It's extremely popular use case. Everybody, especially now, is going to start looking for those, I believe, 10% yields that Credible is looking to launch here. So it'll be interesting to see the momentum that this has. Do they go from 100 to 500 by the end of April next year? What are your guys' thoughts?
Yeah, Credible's coming out. They raised 5 million or so in August in their most recent funding round. So they're really trying to enter into this space and provide credit. I think it makes sense. Certainly the private credit market is hot in TradFi, and we've seen how money markets are hot in TradFi and now are translating well into the tokenized game. So perhaps offering a familiar investment structure on the other side of the market could also be a burgeoning opportunity. I don't know. I have this weird feeling about private credit, and I'm certainly not a deep high finance guy, but it feels like everybody talks about private credit all the time. And usually when that happens, it's generally the top of the market. So I'm not necessarily calling the top on private credit, but but I'd be wary about those structures.
It's becoming a macro show. Huh? Kyle, I have a question for you, as you are the blockchain expert of our three.
I'm doing my best.
Yeah. What's the thing with Plume? Plume L2. You have some insight? What's the specifics of the blockchain? Why do they use it? Or is there something specific going on with Plume?
Yeah, Plume has done a really good job. I know the founder, Chris, has really done a good job of driving tokenization narratives across Silicon Valley. I believe they're based on the West Coast of the US. And I know that they've been working on some test nets. As far as I understand, they are not live with a fully operational blockchain at this point. Obviously, the big difficulty here in working with Ethereum is that it doesn't have the capabilities of maintaining identity information, and some of the restrictions that you need to apply for all different types of compliance mechanisms can be difficult to reverse engineer. Or when we're talking about rollbacks, when we're talking about some of these things, it can be also difficult. So I know that's where they've really been trying to focus on identifying. And so, I mean, the reality is, look, I mean, for a lot of these products, these are financial products first, blockchain products second, right? So a lot of this stuff, I think, is we would say tokenized in name only. And I wouldn't be shocked if this is an example of a capital markets deal that is looking to implement technology as they go. And I don't mean that as a shot or an insult to anybody. It's more of just, I think, my general observations on the market. And I certainly would be happy to be proven wrong on that front. But that's certainly where I think I've seen a lot of the development is in how can we get the deal done and then reverse engineer it to figure out where can we lay blockchain into these components. As opposed to being 100% blockchain native from day one, which has proven to be incredibly complex and is still kind of paving the way.
I guess the guys are also welcome on the show to explain some more what's going on behind the scenes. Yeah.
They definitely caught my attention. They managed to raise, I believe, $10 million in seed funding, which is no small amount for a seed round, I would say. Sure. A good sign for the space to come, and over 80 or 100 projects that they're working with. Definitely exciting to hopefully have them come on the show to hear what they have to say. But if you don't like private credit or real estate, how about an algorithmic market neutral strategy for crypto assets with the Hilbert Capital Fund that's being tokenized on Base through Fortunify, which, got to shout them out because they're local here in Miami. But on top of that, great to see more lineup here and product lineup from Fortunify, and more funds coming to market, folks.
Yeah, and with a higher grade or potential grade of success, because the things we just mentioned that are still problems in this industry is liquidity and identity. These are the two big boundaries still. And what does Base have to offer? It's liquidity, volume, and identities.
Good choice.
I guess Base will be a big RWA player in the future.
Yeah, they're definitely been been a popular choice of blockchain provider, I think, for a lot of RWAs we've been seeing come to market. But also got to give it out to Hilbert Capital, right? Because I also love to see, if you're going to be in crypto, you're going to believe in the technology, you should have some affinity for what's going on with real world assets and tokenization. So I believe many of these crypto funds should be following the same path and saying, we're going to tokenize our LP positions. We're going to also we believe and bleed crypto through and through, in the technology. So I love to see that they're also, leveraging it from themselves, not just for their investment asset strategy, focusing on crypto assets, of course. But
funds we can bring, the better. I think that's going to be a key to liquidity, is that people don't want to necessarily invest direct into so many different opportunities. They'd rather kind of have their stuff be passively managed. It's what we see in the public markets. It only makes sense that the private markets would be the same.
And the last one to cover here is Black Salmon. So they are actually a multi-billion-dollar, $2 billion plus real estate asset manager. And they're based here in Coral Gables. So another Miami company, and they're going to stick to that theme. First, they're tokenizing in St. Pete up in Florida. but their second offering will be here in the medical district in Miami. They're leveraging W-Build, on the infrastructure end, but a great sign of, what we're seeing with lots of other prominent firms like Steelwave that we've talked about plenty on the show, but, institutional real estate asset managers and developers and groups, they are coming to tokenization, whether it be in the form of funds, whether it be in the form of tokenizing their portfolio properties and targets. I think we're going to see it all.
I think within a few years, the complete coastlines of Miami will be tokenized.
Let's do it
at this rate.
Yeah, we've seen a lot of interesting Miami tokenization projects, and
yeah. But what I'm asking, so these are all, of course, first offerings. Huh? It's not secondary trading or any of these things.
Yeah, I think this is
primary.
Yeah, primary. I would like to see some trading of these Miami assets. That would be great stuff.
Yeah.
I'm in the market for these tokens.
Based off of this article, it looks like they were able to raise over $1 million using tokenization, and they sold about 10% of the project for 17 to 20% return. So an interesting opportunity, and it seems like the tokens didn't scare away investors, which is I think a good mark of reassurance.
And I mean, there's a market for these tokens in the meantime, and so many offerings has been going through in the past years. I think there's product enough to start a proper exchange in Miami to list these tokens and to start exchanging them. Why not? And for now, they just use them as a cap table management tool and a distributor of income. But
if you're watching,
why not take it to
you're building that, go reach out to Nico.
Not just that, Nico. They obviously are leveraging the efficiencies, but they also did point out that they, have a usual, call it $500,000 minimum that they were able to lower to 50,000, which I think is a big deal. It opens up a larger universe of investors, lowers your risk for your commitment as an investor, total amount, So I think it's great to see, but I'd love to see some other projects, because we've got the tallest building south of New York City, the Waldorf Astoria, the Mercedes-Benz, the Baccarat, the Dolce & Gabbana, Cipriani Towers, all coming up in Brickell. So I would love to see some tokens related to those projects, because those carry a lot.
I think that they generate a lot of cash flow, these properties and these buildings. So why not tokenize them and list them somewhere so that guys like me can buy them? Why not?
Somebody wants to tokenize the Aston Martin penthouse here, which is still not sold after how many years on the market. Give me a ring. Let's see what we can.
We'll tokenize it and live in it, and
we'll keep the property pristine. Anyway, that's the market movements, everybody. Please drop a comment down below on your thoughts on all these, new offerings coming to the market. Which one was your favorite? Did we miss something? Give us your insights. We always love to bring you in as the viewers as well. But with that, Nico, we're going to say goodbye. Hope to catch you again next week on the show. And we're going to move on to a fantastic interview with Carré, another Miami tokenization company.
Hey everyone, today for this Security Token Show interview, we are joined by Florian from Carré. Florian, how are you today?
Very good. Thank you for having me, Jason.
Absolutely. Pleasure to have you here. You guys are tokenizing real estate in your own way. Why don't you give us a quick overview on Carré and how you guys are working in this space?
Of course. So what we try to do with Carré is tackle the problem of wealth. If you think about wealth, right, most of the people today in the world, the wealthy are getting more wealthy and the poor are getting poorer. And there is a gap happening between the two. And why is this? Is because the wealthy people actually became wealthy because of real estate. There's a saying in real estate that say 90% of millionaires are from real estate investing. So at Carré, we wanted to democratize. We wanted to give access to everyone to real estate investing. And this way we can give access to everyone also the potential of becoming wealthy in the future, right? So this is a problem, this is a challenge we wanted to solve for. So we do this by creating 5 different benefits for our users. The first one is we want to provide an easy access to investing. And this happens through the fact that we provide share at $100. So basically you can invest in real estate starting with $100. If you think about a down payment today in the US or in Europe, you probably have to put between, I will say €40,000, $40,000 and up, right? And this, is the same problem that I was mentioning before. You need to be wealthy, or you need to be able to make a lot of money to be able to invest in real estate, and create rental properties and cash flows. So with $100 a share, of course, this becomes more accessible to everyone. The second aspect that we're looking into is really a fast access to investing. When you look at traditional real estate, especially in the US, it takes about a month and a half to close on a house. So you already know the house you want, but you're still waiting for a month and a half to be able to have it, and to be able to invest in another one after this, right? At Carré, we can do that from 2 to 5 minutes, assuming you know what you want to invest in our platform, right? You already register, is really a few clicks away, and your money invested, and you start getting daily rental income tomorrow. And then number 3, what we provide is a global portfolio of investment. And I think this is very important because when you do traditional real estate investing, for example, I'm in Chicago, right? I have a few rentals in Chicago. The issue I have is that if the Chicago market doesn't work out, right? Not good appreciation in the next 10 years, or not very good cash flow, there's an issue with the city, then I have high risk to the specific location. So at Carré, we want to provide global portfolio. So you have access to, rental yield, appreciation, right? All over the world. And this way you can reduce your risk, and you can have obviously diversification of income. And the last point, point number 5, is really we want to provide a premium portfolio of property, right? So we're looking into, and this saying, right? In real estate, it's location, location, location. We want to provide a great location where there is tourists, when we know there is cash flow today, when we know there will be cash flow tomorrow, and high appreciation. So if you look at St. Martin, we are in the Dutch side of the island, and we are just very close to shops, to a place where you could go out, to 2 beaches, to the golf course, and so on, right? If you're looking into Fort Lauderdale, we're very close to the beach and very close to all the attraction of Florida. And then if you look at St. Martin, our 3 properties are close to the beach. And if you're looking at the hotel we're looking to buy in Scotland, we are on the main street of a touristic city in the south of Scotland. So this is what is Carré.
Very interesting. So let's talk about those properties a little bit more. Tell us about the traction that you guys have. How much have you guys tokenized? And Q3 just ended for the year. So why don't you tell us, what you guys have accomplished over the course of the last, call it, 3 months?
Yeah, so right now we have 5 properties that are listed in our market. That's a value of about $1.2 million in asset under management. So that has been tokenized. And then we are looking right now into other property for Q4 to be acquired. Especially we are looking at another in Scotland. We're waiting to sign the papers with them. That will bring our asset under management to 2 million. So 2 million in tokenization, hopefully by the end of Q4, and maybe another property as well.
Very interesting. Okay, cool. So some traction going. Another, property or 2 that are in the pipeline here. Tell us about what you're actually tokenizing, though. So, a lot of real estate offerings tend to say, hey, here's a special purpose vehicle that owns the deed to the piece of real estate, and we're tokenizing that vehicle. In Carré's situation, what does that look like? What are you guys tokenizing? Is it the whole? Is it a portion? Is it discounted? Tell us a little bit about that structure.
Of course. So it's for us, this is a fully funded property that we tokenize, and we tokenize the entire property, right? And when you invest into a share of Carré, you're getting a share of the property, right? That's similar to how you invest in a stock, you're getting a share of the stock of the Tesla stock, right? And as a result, you're getting really 3 benefits from your investment. The first one is rental income. and this come into a daily cash flow. So every day we pay you rental income.
Okay.
Right? And then number two, this is more for the long term, but this is how you create wealth. There is appreciation to it, right? So if you think about, if you have a 5% yield on appreciation, you can double the value of a property in 8 years, right? So when you invest for the long term, when you invest in real estate, that's what you can create. So that's number two, that's appreciation. And number three, what we have, and that's something that is really innovative, we create what we call vacation points. So think about an airline, you spend money on the airline, and as a result, in the future, you're going to accumulate points, and then you can fly again for free. At Carré, we do the same. So when you invest in properties at Carré, we give you vacation points, for any properties that you invest in. And then those points, you accumulate them through time. And at a specific point, if you have a specific time, if you have enough points, you can then use them to be able to spend them on a free vacation on a property we have. And why we can do this is because most of our rental are short-term rental, right? So they are booked by day, right? And by doing this, basically, there's days in the year where our rental are free. And this doesn't change the yield, right? Because we are still making the same yield. We are still giving you the same rental income. But we can offer to the members a day when we are not renting the property, then booking them on our website and say, hey, I want to spend a week in St. Martin when it's the summer, when tourists are not there, but me, I still have access to the beach, and, this is still a great time for me. It's still a great weather, right? And I think with the digital nomads population, right, that we see a large raise of number of people that actually have job but wants to be able to work anywhere in the world, this is very attractive. Especially with our global portfolio, you can think about, spending your work from home, in Scotland, in St. Martin, in Florida. So this is what we provide.
Really cool. I think that, these token holders are essentially owners of these properties. So why not be able to use them or get that perk to be able to use them, especially if they're not being rented out for, whatever period of time. I think that makes sense, Florian, and a great model to implement as a value add to people on your platform. Going back to the distributions on a daily basis that you mentioned, or cash flow, is that through USDC? Is that through the points? What do investors receive?
Yeah, when you invest in Carré, we didn't want to make it too much Web3 and too much crypto. Our real estate platform is actually mostly Web2. It's just when you invest in Carré, you invest in dollar, and your rental income is back into dollar as well.
Okay.
Because democratization of real estate needs to go first through normal method of payment, and I think the US dollar is perfect for this, right? But maybe in the future, what we use the blockchain for, and this is very important for us, is traceability. And also to be able to create a register, right? So everyone that invests in Carré got a proof into the blockchain. Right now we're on the Avalanche blockchain. Got a proof on the blockchain that they own the property on their wallet, right? So if something happened, right, to anything, to our website, for example, and so on, they have a proof from their wallet that they own this property, right? And I think this is very important. And the second thing, of course, is that once you own a property at Carré, then this asset, of course, that is tokenized can use everything that Web3 offer to be able to have other type of benefits, right? For example, you can take a loan against your assets and all that stuff, right? So I think this is great to have both something that is very simple for somebody to access, right? But at the same time, use the underneath technology that give more benefits and more features.
Makes sense. Okay, cool. And then that does bring us to then future plans. What can we expect from Carré? I know you mentioned the pipeline you guys have, but what else can we expect from Carré in 2025?
I think for us right now, it's a matter of scale. So we really need to scale both our resources, global outreach, and then do more marketing. But our target right now is for 2025 to have at the end of the year about 25 to 30 properties.
Okay.
And I think then the offering is very appealing because you're all over the world, right? You have enough to diversify a large portfolio. And then your assets under management is also pretty big. So that's our target is large scale from an asset under management, but also a number of users and property.
Got it. Well, that's something that we're excited to see. We're going to start tracking the Carré properties on stm.co as well for, excuse me, for our users and our, watchers to viewers to be able to track the Carré performance. So as those new properties also come on board, you will be able to see them on STM as well. Florian, for anyone that wants to tokenize using Carré's platform, how can they get best in touch with you or the team?
Yeah, that's a very good question. So you can just go on carre.ai, and then you can chat with us real time, or you can send us an email at info@carre.ai, and that's directly reach out to our team, and then we'll reach out back to you.
Awesome. Well, everyone that's watching, keep that in mind. If you're in the real estate business or people in real estate and want to start exploring this tech, obviously, hit up Florian and his team to see how you can best work together. We are working on a real estate report that should be coming out soon, which of course, encompasses all the real estate that's being tokenized. And so keep an eye out for that because Carré will, of course, be a part of that big number. And with that, we'll be heading into the next section of the show. Florian, thank you so much.
Thank you, Jason. Thank you for having me.
What a wonderful interview there, Kyle. Love to learn more about Miami companies just dominating the RWA space, and real estate just continues to be hot. And now we've got the Token Debrief where we've got way more news to cover still that happened all this week. Kicking it off with worth knowing, Franklin Templeton is now expanding to Aptos with their Benji token, which is now at over 420 million in AUM. It is quickly growing as they continue to expand on different chains. They're on a lot of different chains now, Kyle. This obviously makes sense, I think, from trying to tap into these different ecosystems. What do you think about this strategy? Is this, the key to unlocking crypto in the long run? Is this a project that has its own use case within DeFi? Is this just a starting point? I would love your take on just Benji in general.
Yeah, look, this is another treasury product on another blockchain. It just further demonstrates the value of this use case in the security token ecosystem. And so I think that's exciting. Also, Salmon, everybody's favorite former T0 exec, is running the show over at Aptos now, Salmon Tesfaye. So if anybody knows him, he's now crushing it on the capital market side with Aptos Labs. And so I'm sure he played a role to some degree in helping make this happen. And I couldn't be happier for him and his team in doing that. So if you hadn't heard that news, definitely shoot him a message of well wishes because he's out there crushing it.
Yeah, congrats, Solomon. It's definitely, I think, no mistake that he joins Aptos, and shortly after, one of the top RWA projects comes to the chain. Love to see that. And moving on, actually, another pretty cool project, a pilot, if you will, that was on Canton, announced by the World Gold Council, Euroclear, which is the largest, I think, one of the largest trading and settlement groups out in Europe, if not the biggest. And they are tokenizing, or they did tokenize in their pilot, gilts, which are non-US Treasury type products, Euro bonds, and gold, of course, with the World Gold Council involved. And of course, to demonstrate, of course, all the capabilities specifically around the clock settlement, instant settlement of these assets, leveraging, all the different stakeholders like banks, custodians, legal advisors to show that, again, this is the future of capital markets. There's a prediction that came out of there for 10 trillion by the end of the decade. We've heard a lot of different predictions, Kyle. Would love to hear yours for those of you who are watching. Put a comment down below of your prediction. But Kyle, this is, of course, another big sort of significance for the market to say, hey, this technology works. And now here's a use case, a pilot to look at. Any thoughts on this?
Herwig, the biggest takeaway for me, and we've been in this space for a long time, and certainly been covering the news for years and years and years now. So maybe I'm a little embarrassed to say that I didn't realize this before, but in this article, it actually talks about an acronym. There's another acronym, and it's HQLA. And I didn't realize that HQLA stands for high quality liquid assets. And so when we talk about HQLAX, presumably that's high quality liquid assets exchange, right? And so that's a pretty funny realization I just made. And when we're talking about HQLAs with respect to this project, as you may have mentioned, you've got the gold product that they're working on the pilot for, as well as a lot of treasuries internationally. Again, this is just kind of reframing and rehashing a lot of the same stuff. Some of this risk neutral or risk adverse style of assets do seem to be where tokenization is really picking up from a trend perspective, especially just because rates are high. Presumably that's a big component here. And they're using Canton. So Canton continuing to drive more adoption of these types of asset classes with more institutions, with more different participants. And it does seem that, we are in that position where it continues to be a genie out of the bottle with respect to eventually we're going to run out of institutions that have never heard or experienced or worked with tokenization, and that will be a very good day.
Yeah, institutionally, Canton is definitely making great headwaves there. But no, it's a good point. And moving on, Kyle, actually, we have Swift, which I think is a pretty big deal. They are allowing for test transactions officially with their financial institution partners starting next year, which is super exciting. We've been covering the fact that they are moving into tokenization. We even had an update just a few weeks ago, just right after Visa coming into the game. So, I think Swift is going to be a game changer when it comes to that adoption curve, in terms of embracing tokenization and getting financial institutions onboarded in a trusted manner, right? Swift already powers billions of financial messages, as they call them, per day across the globe. And now we can, of course, leverage tokenization for that. I'm excited to see a lot of these pilots or a lot of these financial institutions that come on board.
Yeah, they've done a lot of cross-chain testing. They've done many different tests on these types of things, but they unfortunately are what they are, which is tests. And we'll see if Swift can act fast enough to be on the forefront of the curve, or if they will be behind the eight ball. Only time will tell.
Only time will tell. And next up, worth a conversation is Chainlink partnering both with Taurus, who, if you haven't heard of Taurus before, out of Switzerland, they actually were selected by State Street, a $1 trillion asset manager, for their tokenization tech. So they are a big player, and they're going to leverage Chainlink for market data, reference data, identity data, as we've talked about in the past. They also do, net asset value reporting and all kinds of Oracle-related technology. Hence why Chainlink and oracles are meant to be a pretty critical component to RWAs. And I'm glad to see that we are now seeing a lot of these partnerships form, because in the last 5 or 6 years, there were very few RWAs that took advantage of Chainlink or took advantage of oracles to bring in this outside data. Investors need information to encourage trading activity, to be able to make decisions, right? So the fact that Taurus is tapping into Chainlink makes a lot of sense. And Chainlink won another big win working with ANZ, largest bank in Australia, or one of them. And in their Project Guardian initiative, which is another one of these very institutional kind of different trials that are happening over in Singapore under the regulator of the MAS there. So glad to see Chainlink sort of getting their value proposition displayed here.
Yeah, it's fascinating just to watch the infrastructure continue to build, and unfortunately these things take time, or fortunately, right, depending on how you look at it. And looking at how successful Chainlink has been in driving data transparency across the digital space, I'm sure that they crave the opportunity to bring in some of that Wall Street level data. And I know that at STM we always had a good relationship with them, and are always looking forward to helping with that front too. Because transparency really is everything. And I don't think that investors are going to participate in deals if they can't do their research.
Totally agree. And we got 2 more announcements here of some offerings that are going to be coming soon. Meld Meld Gold, tokenizing specifically gold and silver on the XRPL ledger. Once again, another sort of OG crypto name, really going all in on RWAs, especially now with their XRP ledger. Launched its stablecoin recently, I think going into testnet, I believe. So Ripple being now a pretty common, at least potential choice for, I think, RWA issuers when they're evaluating options. And also Block Square continuing its push, tokenizing real estate on Polytrade. Kyle, any takeaways for these two?
Well, a lot of these are continued partnerships and launches. I mean, bringing more gold and commodities, I think, makes sense. The more that we can, I truly believe that arbitrage is what drives liquidity in a lot of ways. So the more sell side assets we can bring into the ecosystem, the more interesting it is for a liquidity provider or someone to actually bring capital in and be able to take advantage of the opportunity. So I think that's relevant for both of these. Real estate certainly, I think, can be a little bit more complex because the assets are less fungible between properties or between investment opportunities based off the debt stack and how it's been capitalized. But I still think that it's a good thing. And this is kind of how the bear market works. We do a lot of partnerships on distribution so that when the funnels really start coming in, you already have a lot of those systems built into place.
And speaking exactly of those funnels, Kyle, we got a lot of partnerships that are pretty much highlighting exactly that coming up here. But specifically, I want to point out that two of these here are regarding Europe. And we talked about it last week on the show. It's become like a consistent theme. Europe's RWA markets are waking up, turning on, and are going to be a powerhouse next year, I believe. And this is just highlighted by SBI Digital out of Japan, one of the leading investment banks, partnering with 21X, which is the first ESMA regulated marketplace for RWAs out in Europe. And so obviously, I think highlights, of course, the regulatory opportunity that I think 21X has with their licensing there. And of course, SBI has been on the same theme for years now of expanding into new jurisdictions, into new partnerships. They also partnered up, I believe, with Franklin Templeton a couple months ago. They've been out doing a lot of work in Singapore with a variety of partners, while also being very active at home in Japan. So really great partnership there. On top of Actionariat, partnering with USATS INX. Actionariat, again, in principle, creating this pipeline to be able to send their tokenization clients using their tech over onto INX where they can be listed and trade. And they're actually going to do that with Actionariat's very own DAX token to be able to exposure directly into Actionariat there that will then trade on INX. Also, INX continuing to be a pretty popular venue of choice for a lot of these tokenization platforms that don't necessarily have an ATS or a marketplace partner for their offerings. Kyle, did you want to add anything here?
Actionariat has dozens of tokenized shares that they've listed on their platform. I hope that this is one of many that they're going to be building in a partnership with INX, which is exciting to see. I know that INX is really excited to bring on more listings. So if you're listening and you want to get in touch with them, definitely reach out to either Herwig or myself. We'd be happy to connect you with their team. They're really, really great people. And they are looking for more secondary listings. So that should be music to some of your ears.
Yeah, and if you like that music about existing platforms, there are a couple new ones also coming to the market. So it just doesn't stop. Trend is going to continue for years to come because the industry opportunity is so big all around the world for different providers to enter this space. But specifically, Sabai Protocol is partnering up with Victus Capital, or Victus Capital will be using their technology in order to, of course, tokenize and specifically scale their operations. And of course, accelerate adoption of their, RWA. So one example of that, but another example is RWA Nova, who I had not heard of before either, signing an MOU with IXSwap, which is, of course, one of the leading Singaporean DeFi marketplaces that's also licensed and such. So more and more of these pipelines, Kyle, you're referring to, they're getting set up. It just means that every week we're going to start to see many, many more offerings that turn into dozens of offerings that eventually turn into hundreds of offerings every week, thanks to these pipelines at full flow, right? So any thoughts, Kyle?
Look, the IX Swap team continues to ship. I like those guys a lot. I was able to spend some time with Julian and the team in many different countries across Asia over the last few months. And I can't speak highly about those guys and their initiatives. So I'm excited for this.
We actually had Julian recently on the show as well. And Jason did a great interview. If you want to go back to our channel, folks, and go check that interview out to hear the latest update, pretty fresh that we had him on the show. And to end our token debrief segment here, Kyle, we do have a couple of regulation and sandbox updates I just want to quickly cover, specifically, especially if you're in England. In the UK, the Bank of England's sandbox is open for applications, everybody. So, if you want that benefit of having a regulator look over what you're doing to be able to work with them as opposed to guess and make sure you do everything as best as possible like it is here in the United States, take advantage of this sandbox because it's a fantastic way to go to market. And I believe Archax has all took advantage of this model as well. And, you see them positioned strongly as the leading platform over in the UK. So really great opportunity, I think, with that. But also some news in the US here. I think a positive sign, though it won't necessarily lead to anything immediately, but a subcommittee from the CFTC, that's the Commodities Future and Tradings Commission there, recommended and voted on tokenized assets being able to be used as collateral. So this is, of course, a common use case we've already been talking about as RWAs being able to be posted for margin, for collateral. And so to be able to see sort of, again, the regulators start to get wise on this, embrace this, and potentially allow for clear rulemaking or clear guidance to the market about this would be awesome. I think a really great thing in general. And I think it's very timely given that, now all of the American financial institutions are about to start using it this way anyway. So Kyle, any closing thoughts about all of this?
We have had quite a set of news here across the board, from primaries to partnerships to everything in between. It's only fitting that we close out on more turf wars in the U.S. about trying to figure out how to regulate these types of things. But, again, generally we're moving in the right direction, but I think that the real impact is going to have to come from Congress at this point.
Yeah, we're going to have to wait a little bit for that as we got a heated election coming up. We'll see what that does for the markets and what it means for RWAs soon. But we, of course, are going to wait and first figure out who are Kyle and I's companies of the week.
Woo!
Man, it doesn't stop, Kyle. It doesn't stop. Lots and lots of news, which means it makes it harder for us to pick one of those companies as the firm that we thought made the biggest move in the space, to give a little spotlight, a Kyle bump, if you will, in what they're doing. And it, of course, puts them in for nomination of Company of the Year, which we will select, of course, in the beginning of 2025. So with that, Kyle, for episode 255 on this show, who do you got for your Company of the Week?
Well, Herwig, I've been in Miami now for 10 years, almost 9.5 years or so. And I have an affinity for South Florida style of companies. I think if there's a company that's tokenizing and they're based in Florida, it immediately captures my attention, and especially one that's successfully tokenized and was able to bring over $1 million into their real estate deal due to tokenization. My winner this week is Black Salmon.
Great choice.
They have multiple different real estate properties, and they are using tokenization not only to actually create the digital shares, but it also allowed them to reduce their minimum investment by 90%. So they were at $500,000. Now they're at $50,000 in minimum investment, thanks to the fractionalization that was allowed by automating the cap table management here. And so they worked with the Chilean firm WBuild on their first tokenization of a real estate project here in Florida. As I said, they did over $1 million in that tokenization sale. And so that's something really cool. It's a 23-story multifamily. It's in Tampa, so it's not quite Miami yet, but they do have a lot of Miami real estate. And the hope is that this trend is only going to continue, considering they had a really successful pilot. So they are really, I think, driving a lot of this forward, which is really, really exciting. This is a $2.1 billion assets under management firm. So this is not a small company, and they're getting excited about it, and they had some success. So for all of those reasons, I wanted to give Black Salmon my company of the week.
That's a great choice, Kyle. And, I like going up to Tampa there. It's awesome. Their St. Pete specifically is definitely blowing up, if you will. It's growing very, very fast. I got to say, Kyle, usually asset managers that have the word black in their name tend to do very well. They're already at a couple billion. I think they're going to do even more thanks to tokenization. So great company of the week there. Congratulations to Black Salmon.
And Herwig, without further ado, to close out another amazing episode of the Security Token Show, please regale us. Who is your winner?
Well, this was a tough one, Kyle. There are a lot of great new offerings this week, a lot of good partnerships that are going to lead to a lot of cool things in fruition. But I think what is getting a lot of people talking, a lot of chatter out there, the same way that Visa made huge waves with their announcement, I believe Swift is having the same impact. So Swift is my company of the week because their announcement that they're saying, hey, come test out tokenization with us to all financial institutions, which is just about everybody in the world since they all use Swift. That's going to lead to a massive growth in tokenization. It's going to kickstart or accelerate a lot of timelines for potential banks and financial institutions that were maybe waiting for someone like Swift to finally say, hey, you can start working with us, as opposed to trialing, a newer technology provider or simply waiting to see where the market went. Well, the market definitely follows Swift and uses Swift to such a degree that the fact that they are endorsing blockchain and tokenization like this, I think it's going to lead to an incredible 2025 of innovation. And again, this acceleration of the adoption. So Swift, congratulations, my company of the week.
Great win. Great win.
Well, Kyle, that is the show. So everybody, thank you, especially if you stuck around through the whole thing. As always, we appreciate your love and support. It's what keeps us going to keep doing this show. And I think it's just getting more and more exciting, right, Kyle? I mean, there's just more new stuff. I remember there were some weeks back in the day where it was just like, wow, there's just not a whole lot to talk about. We used to even have main topics because there wasn't so much to talk about. That's we had to cut those out because this would be a 2-hour show otherwise. So
maybe then people want that though.
Maybe we got to bring it back. So, let us know in the comments if you do, or shoot us a message because we are available on Twitter, X, if you will, as well as on LinkedIn, as well as everywhere else. So please reach out to us with your feedback, your suggestions, people you want to see on the show. It's much easier to get them to come on if we say, hey, so-and-so asked for you by name. So please let us know how you'd like to continue to see us improve. But otherwise, give us a like if you do like it. So give us a like, a subscribe, a share to everybody that you know that might also like RWAs. And with that, happy tokenizing.